Good morning, traders. Richard here doing a quick Ichimoku cloud chart market review of the NASDAQ 100 index. In the September review, we were right about here, and I was highlighting the fact that we were expecting the market to correct on a seasonal basis, just from a seasonal week period, and then highlighted the downside risk targets to the front end of the cloud as well as the standard line. So we're now at these levels. The NASDAQ's fighting hard to rebound from the standard line here as well as the front end of the cloud, as well as this 14,482 support zone. So this support zone here is quite a level to watch out for. As long as the NASDAQ stays above that level and the front end of the cloud, the support should be okay. If that fails, then we can easily dip down to these cloud chart support levels. Now if we project them across, you'll see that these levels are around about 13,000 here, 13,900 and 14,000. So there's still some downside risk to these levels if we don't get October rebound or support come back in the market here in October. But this standard line is a good level for a potential rebound, and then a nice year-end rally to make another attempt at these 15,211 and 15,874 resistance zone. So watch out for a potential rebound from this front-end cloud chart support level, as well as this 14,482 support zone. But be aware that we could see downside risk to these other old cloud chart support levels, which is quite significant. So keep an eye on for support to come back in the market at these levels. Now turning to the daily, there we go. In the last update, we were looking at this resistance test here. The market struggled to maintain momentum above the top end of the cloud. This resistance level held. It was tested about twice, and then the taps opened. Back here in September, the September cloud chart review, we highlighted that the support zones to watch out for is the standard line here as well as the bottom in the cloud here. Failed through that. Then the market entered bearish territory. Price action below the cloud is bearish. Any kind of swing trades below this to the upside are contrarian plays, because from an Ichimoku cloud chart perspective, price action below the cloud is bearish. So we had that confirmation and then made a couple of swing trades from these old support levels, 14,482. You can see how that support level came in. Nice strong rally back up to the front end cloud chart resistance, only to be met with resistance there. So that resistance level held, and then the market sold off again only to retest this 14,482 zone. So this is a critical support zone for a potential rebound into the year-end rally to retest this top-end cloud chart resistance level, as well as test the other top-end cloud chart resistance level into the year-end rally. So these are the upside resistance targets. This top-end cloud chart 15,244 and 15,474. These are the upside resistance potential targets for a potential rebound at the in the next week. If support comes in, we can get a rebound for the year-end rally towards these levels. Now, further downside risk, if this support level does not hold, this 14,482, which we now know from the weekly is a major support zone on the weekly cloud chart, there's downside risk to 14,255, and then this bottom end 14,000, basically this bottom end support zone there. So if support does not hold at this 14,482 zone, there's downside risk to 14,255 and 14,000, this old cloud chart support level there. But do remember now, price actions below the cloud, that is bearish, and any kind of buys, rebound buys here is contrarian plays. Now that's to keep in mind on the daily. So not looking too good. Swing trade potential from support back up to the bottom end of the cloud. But do remember, price actions below the cloud. The NASDAQ really needs to be back above the top end of the cloud to be bullish on the daily Ichimoku. Now on the 4-hour, we can see how the market rebounded from this 14,482, which is a weekly cloud chart support zone, as well as this 14,401. There's also a nice support zone from this old cloud chart support zone. So on the 4-hour chart, we got our rebound. Just support came back in. Now it needs to break past the bottom end cloud chart resistance on the 4-hour. It needs to break past the top end cloud chart resistance. So these are the upside resistance targets for this current rebound rally from the support zone to get past. And then once we're back above the top end of the cloud, the outlook will change back to bullish on the 4-hour Ichimoku cloud. But we're not out the woods yet, but it's looking encouraging for a potential relief rally back at the end of next week towards the beginning of November. And then a nice another rally attempt towards the end of the year to take out these old resistance levels there. But so far so good. Did get our rebound from this 14,482 and 14,400 cloud chart support levels on the Ichimoku cloud. Now do remember, price action is still below the cloud, so overall outlook is bearish on the 4-hour with these short-term swing trade opportunities. Now, if we just take a step back and just look at how the NASDAQ equal weighted has been performing versus the NASDAQ 100 equal weighted versus the NASDAQ 100, you can see the NASDAQ 100 index is really, the performance really ran away from the equal weighted index. So the market rally concentration is still in a couple of large cap stocks heavy weighted in the index. And the NASDAQ 100 equal weight is very much performing in line with the NASDAQ composite index. You can see how the composite is the green there, and the black is the NASDAQ equal weighted one. So you can see there's pretty much in line performance there. But so far, the NASDAQ 100 started rallying away from the equal weighted index here in May, June, and now is consolidating together. But still, you could see the performance disparity is quite wide. So the overall strongest performance of the rally comes through in some of the large cap, heavy market cap weighted tech stocks there. So that's kind of a risk that the market breadth is not particularly strong at this point in time, and the market rally's been narrowly concentrated in a few large cap stocks. So keep that in mind for the NASDAQ 100 index. The other thing to look out for is this Fibonacci retracement level. We at the 23.6% Fibonacci retracement level there. And that coincides well with the standard line of the cloud as well as the front end of the cloud. So it would be interesting to see a bit of a relief rally here towards the end of October, beginning of November there. So that's a 23% retracement back from the October low where the rally started there. And now if we duplicate that on this rally for this move, let me just move that to the March low there, you can see it's almost completing a 38% retracement, very close to that. So that's also kind of a nice, kind of a normal orderly pullback and retracement between the 23 and the 38% Fibonacci retracement level of a much larger upward continuation pattern. So there is potential for a potential rebound into more towards the end of the year, or the next couple of weeks towards the year-end rally. So will we get that rally? All depends on if support's going to come back in the market at this level. It's testing the standard line of the cloud there, front end of the cloud, and it's also testing support, this old significant cloud chart support zone. So all wheels are in motion for a potential rebound rally over the next couple of weeks. Until next time, happy cloud chart trading. Bye for now.